For the past year, we all have been complaining about how house pricing have been rising faster than ever. Every single month, we had a new record. What happened over the last year or so was something unbelievable. People would stand in lines to be able to have a chance to bid for a house. I am not talking about being able to buy, but just having an opportunity to fight for it. People paid 10, 20, or 30% over the asking price just to be the one who is going to buy that house. However, that has changed in the last few months. The market seems like it has reached its peak, and it doesn't seem like it's going to rise as it did before. In April, Realtor.com data showed prices on active home listings up a whopping 17.2% compared to a year prior. In October, that bump declined considerably, falling to just 8.6%. That doesn't mean prices are about to fall. But that definitely indicates to the fact that they aren't growing like they used to. Some people are worried about a potential crash, others are calming us down by saying prices will keep rising but not at that pace. Whatever opinion you are looking for, it does exist out there. But what we want to find out are the facts, because only based on them can we have a clear image of what's happening and what could potentially happen. Hello viewers. Stephen here, and I welcome you to this channel where we talk about investing, business and finance. In today's video, we will be talking about the 80% crash that is coming. But before we begin, be sure you have subscribed to this channel and smash that like button on this video to support the channel. Thanks for doing that. Now let's begin. Real estate is such a market that it affects everyone and not only homeowners. That includes investors, renters, and so on. But the slowdown in prices was expected. We all knew that was going to happen. It was not a matter of if but rather when. So whoever ripped the benefit of this housing rollercoaster is smart, because we aren't going to see anything like this in the coming future. However, it is still impossible to predict the market, because even the almighty algorithm, which has all the data you ever need to predict the market, couldn't make it. Yes, I am talking about Zillow. If you haven't been living under the rock, you probably heard about the disaster that Zillow went through by trying to use its data to rip the market, but their plan backfired, and Zillow's stock is crashing down. In the last few weeks, at the time of this script, the stock has plunged by over 46%. That's literally worse than what happened during March 2020. ARK Invest sold its entire portfolio of Zillow stocks. Yes, it's that bad. But to be honest, Zillow had a rough year. Just take a look at their stock graph. Although judging by the housing market, it should have had a great year. Anyways, since Zillow has all of this data, it tried to predict accurately future home prices, so it purchased thousands of homes. More than 14,000 homes in just 6 months. It makes sense because Zillow literally has more data than anyone else, but the plan backfired. Zillow had overspent and was sitting on massive losses in the months to come. That resulted in a combined loss of $550 million and the end of a business that had been rapidly growing. The layoffs will pare 25% of Zillow's entire staff. The board decided to shut off the project. So when it comes to housing projections, take them with a grain of salt, because this market is literally uncontrollable. Anything could happen. But what is certain for sure is that getting a mortgage at a super low rate is a great deal. Mortgage rates peaked at around 5% in 2018 and reached their lowest point in January 2021. Just to give you an idea, how much would a single make in your final house price? For the sake of example, let's take a $500,000 house for a 30-year mortgage with 3 and 4% mortgage rates with a 20% down payment. Of course, there are many other factors that influence the price of a house, such as property taxes, insurance, and so on, but let's take those factors out of the equation. With a 4% mortgage rate and a 20% down payment, that $500,000 house would amount to $859,000, while at 3%, the total amount would equal to $758,000. A single percentage in this example equals to over $100,000. That's a pretty good amount of money. Especially in the long run, it would make a real difference. Especially if we count the opportunity cost, but we won't do that here. That's why when the mortgage rates drop to their bare minimum, people rush to secure a mortgage at that rate, because even if they slightly overpay for a house, they will still win since their mortgage rate cover it over the long run. Especially if you factor in the fact that house prices generally rise over the long term, either way, you won't lose. However, that astronomical demand led to the highest price increase in home price in recent history. At some point, prices began to rise so much that even a low mortgage rate wouldn't compensate for it. I guess that's exactly what has been happening lately. Imagine for a moment when you have that kind of demand, but there is still a shortage of homes in the market? I guess the answer is obvious. It's not easy to build more homes, especially if you don't have the infrastructure in place. So, according to the basic laws of supply and demand, when demand rises while supply stays the same, the price increases. But what if the supply drops as well? When the pandemic broke out, the future seemed so unpredictable, even the stock market crashed. No one knew how to deal with this virus. We had no idea when the vaccine would be ready, so a lot of people felt hesitant to sell their homes. Letting people to get into your house to check it out would create a risk of getting the virus, so even those who were planning to sell postponed it, which drove the price higher and higher. On top of that, when you see the value of your house rising so rapidly, the desire to sell it now instantly disappears. Why sell it now when you can sell it at a much higher price 6 months or a year later? That further diminished the supply of homes in the market, creating a bigger shortage. We have already made a few videos about the 2008 crash, and if you take a look at the factors that caused the Great Recession, you won't find any of them in the current soaring market. We don't have subprime mortgages, we don't have fake AAA ratings to junk loans, and the industry is pretty regulated. Although the number of people who took mortgages did significantly increase due to the reasons we have explored earlier, most of them had good enough credit scores to keep up with their mortgage payments. Will house prices keep rising? Probably yes, but only time will tell. However, we won't see anything like we have seen in the last year or so in the coming future. But that's just one prediction out of many. When you are buying a house, you shouldn't concern yourself with short-term ups and downs. When you are taking a mortgage, you aren't taking it for 2, 3, or 5 years but for 30 years. You have no idea how many crashes and ups are going to happen during that period. Median home prices 30 years ago were around $100,000. Today it's $375,000. So 5, 10 or 15% crash wouldn't mean much in the long. Of course, it's better if you can buy right there at the bottom. However, even if you don't, it doesn't matter. You are still safe. Even after the 2008 crash, home prices rose back to the pre-crisis level in 2014 and are much higher now. That's the mentality you should use when you're buying a house, and not a crypto mentality where prices can shoot through the roof today and crash the next day. The real estate market is also old as civilization. Keep in mind that it was not just real estate that soared that much. We had huge inflation overall. Asset prices across all sectors have dramatically risen, so it's difficult to come to a conclusion that prices might crash in the coming future. What happened in the last 2 years is more like a boom, and we might be at the end of it, or it might last for a few more years. Only time will tell. Meanwhile, you should learn how to take advantage out of this boom. You might need a fortune to get into real estate, but you don't need much if you are getting into the stock market. Now give this video the thumbs up that it deserves, and make sure to subscribe if you haven't done that yet. Thanks for watching, and until next, bye for now.